China's Aussie ban makes no impact. Let's have a look. Hello everyone, Florian.Heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee. We're going to have a look at an article that's discussing the China's ban, or unofficial ban, on a range of Aussie products and how it's failed to inflict significant damage on our country. But first, we need to look at the trade relationship between China and Australia, and I will just bring up one of my favorite websites, the Observatory of Economic Complexity. And here it shows the relationship between Australia and China. Now, in 2019, China was the #1 destination for our exports, $111 billion. Now, the top product that we sent to China, I don't think anyone is going to be surprised, is iron ore. $55.1 billion of it, guys. We can see it right here. $55.1 billion. The top export in 2019, we were the 12th, export from China, or the 12th highest or most important export destination for China. And their top product was broadcasting equipment, which, well, I'm using right here, right there, all the computers. The economic complexity of Australia, we're at negative. It's kind of embarrassing, guys. We're at negative 0.16. We're ranked 82nd in the world. And I'll show you a chart just to show how drastic that change has been since the 1990s. China is ranked 29th in the world. The GDP of Australia is $1.4 trillion. Wow, that's our debt in 2024 is predicted to be that. So there you go. Our debt will be equal to the 2019 GDP. Fantastic. Great. That's national, federal and state debt. GDP growth, 50.5. So we're ranked 93rd in the world, where the GDP in China is 14.3 trillion, 10x us. They literally are 10x Australia, guys. And their GDP growth is 181. We can see here our exports, our biggest one is iron ore. You've got coal as well. You've got gold. The #1 that we're bringing in is broadcasting equipment. We can see here, this is the latest data of what's the trade between Australia and China and the differences in imports from China and Australia. So really, I think the only country that we're winning the import war with is Papua New Guinea. There you go. Everywhere else is pretty much, well, very close. Very close. So that gives us an understanding of just the trade relationship between Australia and China. It's definitely China's very important to the Australian economy. Now, this is the chart showing our economic complexity, how in 1999, I thought it was 1990, sorry. In 99, we were over 40, or just about 40. And our economic complexity has tanked since then. There you go, everyone. Look at Argentina. Look at the Russian Federation. Look here, Japan. Hasn't budged. These are all countries with similar GDP per capita to Australia. So, China's Aussie ban. Let's have a look at this article from news.com.au. China's unofficial ban on Australian products fails to inflict significant damage. This is something that we were concerned about having an impact on our economy. But has it been long enough to actually see? You know, it takes time for these things to ripple through the economy. Has this been dulled by the government intervention in the economy? You know, by all of the support payments? We'll see. The damage from Australia's unofficial ban on Australian products has largely been offset by businesses finding new overseas markets for their goods. According to a report by the Lowy Institute's The Interpreter, the effect of China's trade sanctions on Australia has been completely swamped by the booming iron ore trade. So what I'll do is, you know what, we'll bring up trading economics, guys. Let's have a look at the current iron ore prices. Let's see where we're sitting at here. Come on, I'll bring this in. What do we want? We want commodities. We've got gold. What's gold at? Ooh. Gold. Come on, iron ore. Where are we sitting at? 62% is at $170 US. Iron ore is at 169. Well, there you go, guys. Look at that. Look at that growth. We'll go to 10 years. There you go. We're right back to the crazy mining boom times. 2011, 2012. I remember the coal prices back then were so high. You could see it in just the quality of the designs people wanted. And remember, the budget is estimated, it was based on a $50 iron ore price. So the government is doing pretty well, particularly Western Australian. So the total economic impact of China's trade coercion against Australia seems to have been quite limited thus far, Arthur Lowy Institute chief economist Roland Raj wrote. He said only Australia's wine industry had struggled to make up for its losses. Total beef exports were also down, but this is more a reflection of supply issues after years of drought. Last year, China began blocking imports of Australian beef, coal and other products after Prime Minister Scott Morrison, with support from the US, called for an inquiry into the origins of the coronavirus. He told The Australian that with the exception of wine, the net loss to Australian exporters as a result of the bans added up to less than $1 billion. So China trade bans failed to hurt our economy. Last year, Australia's merchandise exports to China were worth $145 billion, which was just 2% less than in 2019, despite the economic downturn caused by the pandemic. Previously, exports of barley, beef, coal, copper, cotton, seafood, sugar, timber, and wine to China were worth about $25 billion in 2019, making up 1.3% of GDP. While this fell by a massive $20 billion last year, producers have managed to make up much of this shortfall. For example, coal exports to China fell by $6 billion, but Australia's exports to the rest of the world grew by $9.5 billion in annualized terms. Australian coal exporters seem to have been quite successful in diverting to other markets, he wrote in The Interpreter. We can see here, exports to China are going down, and exports to the rest of the world are climbing back up. Exports other than coal held steady for most of the year before falling by about $4.5 billion late in 2020. This was mostly offset by a $4.2 billion increase to the rest of the world. A bumper barley crop also helped partially make up for the weakness in other areas. Limited damage shouldn't be a surprise, he noted. China has targeted producers for which it thinks the cost to itself is relatively low, mostly because alternative suppliers exist. But in most cases, that means there are alternative buyers. And this reshuffling of global trade is precisely the reason the damage inflicted on Australia has been limited. We can see here, there's the barley market as well, everyone. Exports to China down. Exports to the rest of the world have increased. Australia is not unscathed by the trade war. However, this does not mean Australia emerged unscathed. Mr. Raj points out, exports would have been higher without the trade sanctions, and the iron ore boom will eventually decline as China shifts away from its pandemic stimulus and Brazilian supply recovers. The boost to coal exports is also being driven partly by pandemic stimulus, especially in China, although experts believe trade will rebound quickly to pre-COVID levels over the coming years. However, China's actions have also had repercussions for its own economy and citizens. Last year, Deloitte economist Chris Richardson said China's trade war had effectively introduced a fear tax and had driven Australia's iron ore prices higher. Iron ore prices are close to the peak prices we saw during the mining boom. Exactly. Exactly. Which is remarkable considering economic conditions and the fact that China's economy is now as strong as it was, Mr. Richardson told News.com in December. Mr. Richardson said the trade war may actually have sent prices higher because businesses were worried Beijing would act against iron ore, even though it is unlikely to do so. So speculators and steel mills in China have been buying up the resource in case a ban came down, and they had to find other more expensive sources of iron ore. China's ban on Australian coal also had repercussions for its own citizens, with reports that dozens of Chinese cities and at least 4 provinces asked residents and businesses to cut back on how much power they use. So there we have it, everyone. It looks like the, Chinese trade for Australian goods has been largely offset by demand from other countries in the world. What do you think? Some good news for the economy. Definitely. So, the solutions to all of this. Appreciate the market impacts and prepare accordingly. Don't have all your eggs in one basket. We're seeing the wine industry has been the one that hasn't had the capacity to deal with it. We saw it with the rock lobster industry over in Western Australia. They were so dependent on the Chinese market. No mention of that in this article. I may have to do a bit of digging around to see how they're going, if they've managed to recover and find other destinations for their goods or services. I mean, it's an age-old lesson of all business, guys, and it doesn't change at the scale of a nation. Don't be too dependent on one supplier or one client. As always, thanks for watching. Please like, share, and subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. Are you surprised that Australia's managed to find new destinations for our exports? Do you think it will have future economic ramifications? And do you think iron ore will stay at its relative level so high? As always, thanks for watching. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links on Amazon, eBay, Independent Reserve, or Aussie Broadband. Take care, have a great day, and I will see you all in the next episode. Bye for now.